Hello and welcome to Fintech Impact. I'm your host, Jason Pereira. Today on the show, I have Sarah Morton, Chief Strategy Officer at MeetAmi Innovations. MeetAmi is a company that's working to bring digital assets to the traditional wealth management space in Canada. I brought on the show specifically to talk about how she's going to help evolve the industry into the digital asset space. And with that, here's my interview with Sarah. Sarah, thanks for joining us today.
Thanks for having me, Jason.
So, Sarah Morton of MeetAmi Innovations, tell us about MeetAmi.
Well, MeetAmi is our company that we have built to help advisors engage directly with digital asset investing on behalf of their clients. And the company was founded a couple of years ago as we recognized the growth opportunities in the digital asset space, starting with cryptocurrencies, but broader digital asset investing, including tokenized equities, tokenized real estate, and everything that's coming in that space. And we looked at the industry was really born out of consumer adoption. So lots of places, well over 350 exchanges for consumers to invest in digital assets. But we found people called their advisors, I want to add digital assets to my portfolio. And the answer is no. And we recognize there's an opportunity there, along with a number of challenges of how do you integrate this fast-paced evolving world of digital asset investing into the traditional world. And so we've spent a lot of time really understanding traditional wealth management, portfolio managers, IIROC dealer brokers, RIAs, how that whole world works, software platforms they run. And we built our first product, Amy Pro, which is a software platform to enable advisors to manage their client accounts and invest directly in digital assets on behalf of their clients. We work with regulated vendors. So we work with, for example, Gemini is our first integration for qualified custodian and liquidity because they meet the qualified custodian status as we launched in Canada. And our clients have the SMA interface where they can manage multiple client accounts from a single pane of glass. They can transact directly in digital assets. They can build portfolios. They can model portfolios. And then we feed that data into their traditional system. So we have an integration with Index that is live today. And then we're working with other parties to integrate so the data feeds in and is part of the overall wealth management practice.
Excellent. First, before we go any further, let's talk about the origin of the company. What was the initial issue that gave rise? I mean, obviously, it must have been something to do with, hey, my advisor can't actually invest in this stuff for me. How do we solve it? Talk about the initial genesis of where it came from.
Yeah, there was a number of factors. So my co-founder and I really got involved in the blockchain space about 4 years ago. And initially we were looking at blockchain and crypto mining, just with Canada having such a surplus of power. We looked at the mining space. We started really working with the investment community to understand what they were thinking about in terms of crypto investing. And, if you go back 2 years, it was a bad word. Personally, as we talked to our advisors and they couldn't invest in digital assets, we went down the journey of doing that on our own. And there was a day I remember we were sitting in our office and a friend called and said he urgently needed to get crypto because one of his clients had been hacked and locked out and what was the best way to do it. And it sort of spurred this whole conversation around everybody needs a crypto friend. It's a deep journey. There's, everybody kind of goes in down the rabbit hole on their own and figures it out. And what if you could call a friend? And that's where the idea and the name of Amy. Ami in French, amiga in Spanish, Amy's your crypto friend. So the whole MeetAmi family of products is designed to help, to be the co-pilot on the journey into digital assets as we transform into that world. So it wasn't a single point. It was a number of factors.
So let's not, diminish here. For those who don't understand, this is not just a simple fact, as simple as buying a stock on a market, right? Now, in Canada, we do have the benefit of being able to have mark-to-market products that can hold crypto. So I can buy ETFs and mutual funds that do hold crypto. There are, I'd say the downside of that, of course, is that there are fees just for the existence of those structures. And it's not quite the same thing as being able to reach through and own the individual security itself, right? Which is something that it's the pooled solution is definitely a solution, but it's not necessarily a solution for everybody. So that's not something that's simple. And part of it is that our current massive legacy infrastructure using COBOL batch servers that batch at the end of the day just can't handle something that clears as it basically works. It's hilarious to think that you have to merge a blockchain ledger with batch end of day systems. So this is not a small lift, right? So let's talk about like the challenges in creating this platform, right? So talk to me about like kind of the base level stuff, and let's work our way to the eventual console. What were the biggest things you've encountered that were technological issues along the way?
Where to start? So if you look at as you say, the crypto world, the way transactions process, the way they're ledgered is different than I want to buy an Apple stock, I buy a single unit of an Apple stock. So a lot of our last quarter has really been going through the mechanics of ingesting the data that comes out of the trade execution platform and I want to say, quote unquote, normalizing that into the legacy reporting system. So with, say, for example, a Bitcoin, you can place an order for 1 unit of Bitcoin. That might fill in 1 unit. That might fill in 2 transactions. That might fill in 20 transactions. If you've set the price aggressively low, it could fill over several days. The advisor at the end of the day wants to see Mr. Client has 1 unit of Bitcoin with a book value, with some transaction fees and a market value. To get that data from liquidity into that system, we've had to do a lot of architecture to capture all those transactions, make sure we've got them ledgered on our blockchain, and then be able to feed that data in, as you say, at 4 o'clock EST on a daily basis. So,
it's too funny for words.
Yeah. So and really, I think I would say we were naive in that undertaking, but we've really gone deep in the complexity and have that architected. So that's fundamental, that we can enable the advisor to process the trades through a simple interface and then receive that data into their wealth management system or their portfolio management system. And we've had tremendous working relationship with Gemini because there's had to be many things architected on both sides in order to facilitate the ease of use that the advisor needs and some of the reg tech pieces that we've needed to build into our system. So how do you address supervisory? How do you address exemptions? So if an advisor builds a portfolio and the balance is off, how are they going to get that data? How are they going to correct that? How are they going to rebalance that? Moving assets from cold storage. So the advisor purchases on the exchange and then they need to move them to cold storage. So they're held offline and they're in that qualified custodian where there's more insurance. So making sure the advisor understands that process, because you're not really used to buying an asset and going and putting it somewhere. We're addressing the challenges when there's multiple custody providers, how we're going to manage moving assets across a public blockchain with transaction fees. So there's a number of topics coming up that really need to be simplified and workflows built to really drive adoption and make this easy for people.
Yeah, it's definitely traversing new territory, right? So cold storage. So we're talking deep cold storage, or we're just talking offline cold storage? And then we'll explain that for people in a second.
Yeah, so we're providing what Gemini is able to provide, which is cold storage offline. We are looking at other integrations because there are different use cases, right? So depending how quickly the advisor may need to access the asset, the custodians will be different. So with us being a multi-custodian platform, we're the only multi-custodian platform in the market to address the different use cases. So if you look at an insurance company who wants to hold for a long period of time, it's ultra cold storage, right? Ice cold in a vault, versus an advisor needs to be able to rebalance and have access, but needs security around the asset. And needs the insurance. Extra insurance comes with cold storage. We don't want to be leaving assets on exchanges or hot wallets.
Yeah. So, and for those of you listening and wondering what the heck we're talking about, hot wallets are accessible online. Like the keys are all stored so that basically like it can be transacted, but there's a way to take those or store those digitally in such a method where those wallets are technically like the private keys are taken away and stored somewhere that's not hooked up to the internet so that you can't move on them right away, which provides an extra level of security. So that's what we're talking about. And yeah, for anyone who's looking there's risk associated with any of this, right? There's always risk associated with the crypto world that those keys are going to get out and you're going to get stolen. The only protection you have is to make them inaccessible one way or another. So this is something that we don't have to worry about when it comes to stocks, right? But it's something we have to worry about in the crypto space, and it's definitely key. Okay, so you have to build a bunch of innovations. What's the end result? If I am an advisor and I start using your platform, what is first off, let's just do something simple. A client wants to buy a bunch of Bitcoin. I have money in traditional accounts. How does this look?
Yep. So more areas we've navigated. So if we look at the portfolio manager example, because it's different than an omnibus IROC dealer broker business model. Right now, the model is set up that the firm, the portfolio manager, sets up an account with Amy Pro and sets up an institutional account with our qualified custodian, in this case, Gemini. And we go through setting up those accounts and connecting the software so that once they're activated, the advisors can be created and they can create their clients within Amy Pro. Each client has a named account. So in similar sense to National Bank or IB or Fidelity, it's a named account and it gets funded. And then once it's funded, the client or the advisor sees the funds available and through our very simple interface can buy Bitcoin, buy Ether, and in the next couple of months, we'll be able to buy another 10 coins. They'll be able to make those transactions. Once they're processed, they can move those assets into cold storage and store them on behalf of the client. And then we extract that data from Gemini and feed it into the portfolio management system. So the advisor sees the entire holding the next day, as with other purchases. So that's the fundamentals of it. You'd asked about some of the challenges we've overcome. Discretionary account providers don't like wiring money to crypto exchanges. So we're still navigating, we need the banks to start accepting adoption and create some of the rails for the money to move faster. So we're working with what we can, but it works and we have success and we have clients on the system doing it. So that's step one. The advancement will be when we see more rails for money in. And as we're building portfolio tools, it'll just create easier methods for advisors to create portfolios and drive mass purchases.
Yeah, I mean, that's got to be a challenge, right? Someone wants to make a move on something. We don't want to wait on traditional payment lines to basically move money from one account to another. And unfortunately, because we can't merge the two seamlessly, there is that friction there.
Exactly. So we're working with what is available today, and the clients who want to get into the space are willing to fund their own accounts, but we are really hoping to see more traditional financial adoption and acceptance. We actually got accepted into the RBCX program this year, which we consider a major move that CIBC and RBC and some larger institutions are really recognizing the movement towards digital assets. So we consider that a positive.
So now that you've given advisors the ability to basically do this, what are you doing to help explain this universe to them?
Well, good question. We are launching Amy Learn, which is our learning series. We have a fantastic head of learning. Our chief learning officer, Chuck Hamilton, has been a thought leader in learning and blended learning for the last 20 years. And he has joined us and has built out a learning strategy because not only does he see the opportunity to educate in this space, but also the complexity. You can't buy a book on Bitcoin, read it front to back and know everything about Bitcoin. It's moving so quickly. So we've got some blockchain 101, Bitcoin, a number of courses that are being launched that will have modular pieces to allow advisors to understand this and then really meet their proficiency needs. There's a gap there. We talk to the regulators quite frequently. There's no prescribed learning. So it's one of the challenges advisors, the firms, the back office, the accountants, we really need the world to get that basic understanding. So our learning series will address that. And
you've got something called MeetAmi Consumer. Talk to me about that. What's going on there?
MeetAmi Consumer was the initial concept. We've stayed focused on the advisor adoption. There's just so much in the space. So the learning series will help support consumers, but right now we're so immersed in the wealth advisor world that we haven't moved that forward.
Well, talk to me about how the conversation is changing. I'm sure when you first started talking to wealth management firms about this, there was a lot of dismissal probably. That has to be changing, not just as people get used to these concepts. So what are you hearing from the conversation or how the conversations developed over time?
Yeah, you're absolutely right. A couple of years ago, it was, maybe one client asks. Now we're talking to some advisors who are seeing close to 50% of their clients asking. We've definitely seen the ETF as a Band-Aid to get exposure and has met a need, but recently it changes weekly. So we've had conversations recently with advisors who are calling us and telling us that their clients are pulling cash out of their managed accounts to go do this on their own. So that's spurring management to accelerate a bit more. So it is evolving. I think we're seeing studies. KPMG has done studies, lots of studies in the US. Interest is increasing. We know younger advisors or younger clients are interested in this. So advisors are recognizing how are we going to meet the changing needs of our clients? So we're seeing close to 50% of advisors now saying we're being asked about this and we don't have a solution.
Interesting. Okay. Different client experience than mine. I'll say that much. I will not say it's anywhere near 50%. So you're seeing that.
It's interesting in the US as well, because we're working with a number of RIAs who are setting up brand new RIAs, and they are only going to focus on digital assets. So they want crypto exposure. They want tokenized real estate exposure. So we're seeing a shift, and you're seeing these younger investors who are making a lot of money in the crypto world, and they need advisors who can actually help them navigate that and recognize what the tax implications are and how to reinvest it. So we're seeing a shift across the border that's more aggressive, but more interesting in Canada.
Shocking.
I know.
We'll be ahead on something. I don't know what to say about that. They're never, straight ahead of us by multiple years on that. My cynicism. Anyway, so I think not surprising. I mean, it is a little interesting to see that you're literally having digital only RIAs. I mean, I see that as a niche. I mean, I still think it's a little bit exclusionary to focus only on that, but nevertheless, more power to them and good luck to them. Excellent. So how much, so that's the advisors, right? You of course have to deal with the likes of broker dealers, RIAs and ICPMs are different. They have more direct control. What kind of reaction are you getting from them, from the broker dealer world?
They're
oh, you're being very precise with your words. Okay, I get it.
I'm sorry.
Yes, I don't want you to throw your clients under a bus, but I will say that I'm guessing, the management of broker dealers is not typically the leading edge of the spear on innovation. So I will say that much.
Well, I'm being cautious because we have NDAs in place. And
okay. So what I want to know more so is, how has the conversation evolved? Like, are you seeing much more interest and much less reticence in the last, say, 24 months?
Absolutely. Just even the last quarter, at the end of 2021, there was an urgency to start moving through the process and understanding where firms are going to play. So absolutely, there's a number of firms who are firmly planted in the no camp, and there's a number of firms that are accelerating the conversation and exploring. So usually it starts with a workshop where we do some education to the management team or the executive team, talk about the state of the world, what the options are. As you talked about, some firms will just be happy with the ETFs and different vehicles like that, and others are recognizing that whether it's a 24-month strategy or a 5-year strategy, it's time to start engaging that.
Well, I think that's the conversation I've had with others, is that, look, okay, I get it. Maybe it's not on your radar now, but you need to start doing some kicking the tires, right? Because maybe your thesis of it disappearing happens. And that's the case. You're sitting there going, okay, I talked to some interesting people. I'm not saying it's going to, but if it doesn't, you don't want to be caught with your pants down 5 years later when everybody else has done this and you're losing business because of it.
Exactly. And, we look at some of the organizations in the US, like Binance globally transacting 15 billion a day. Looking at FTX has raised, I think it's 400 million on a $32 billion valuation. Looking at BitMEX, just acquired an 8-year-old exchange. BitMEX just acquired a 279-year-old German bank. So there's this early days of crypto is going to eat traditional finance. But when we're seeing exchanges that have close to 100 million consumers on them and a market cap larger than some of the Canadian banks, I think we need to wake up and address, is this going to be an issue for us, or are we going to just lose out on that? And is the world going to change overnight? Is everything going to go digital? No. Is it going to go digital in the next 10 years, 20 years, 5 years? I think it's really important to orient where you are in that and where your clients are. And if this is something your clients want today, or the clients you want tomorrow want this, it's time to start thinking about it.
Yeah, but I would also say that, those are, dismissive. Keep in mind that while we're talking about cryptocurrencies today, which you can basically debate the validity or necessity for any of that, the reality is one of the most striking use cases for blockchain technology is the replacement of all the batch processing infrastructure that happens in relation to securities. Like it is like, frankly, almost custom made for replacing all the infrastructure in the securities business, which counts for, frankly, I think some like 30% of all the cost associated with everything. So sooner or later, that shift will happen. And those technologies, it may not be that the legacy platforms are able to keep up with that. Probably won't be that the legacy platforms are able to facilitate that. So if anything, you're in a way a future hedge against basically having to make that move wholesale, when that digital future becomes reality.
Correct. The other thing
absolutely.
I wanted to mention back to the ETFs.
Yep.
Well, it's an interesting model, right? Because the ETFs provide you exposure, but with our model and our cost structure, an advisor can hold the asset directly for their client. They can make the management fee rather than the ETF making the management fee, and the client holds the asset. So economically, it's not more expensive. It's actually less money to hold it directly with the same qualified custodian. And then when we turn on the world of DeFi later this year, the client can actually start to earn interest and cover their costs on holding this asset class. So we see a strong and compelling argument for holding the assets for the clients.
Yeah, I mean, I think it comes down to, just to say what you just said a different way. I mean, direct indexing is a trend picking up in the US. The concern there has always been the need for certain technologies scale and, keep, again, the cost down to the point where it's not going to add substantial cost to it. Whereas you can buy fractional ownership of any coin and create a diversified portfolio, probably, well, depending on the coin we're talking about and the exchange we're talking about, at a very low to no additional cost compared to just holding it. So managing that is definitely a benefit. And then what you said in terms of the world of DeFi, all that's doing is taking the securities lending that custodians were doing before and making the money on themselves and putting that in the hands of the consumer, right? Like at the end of the day, most people don't realize this. If you own your shares of Apple, yeah, they're technically sitting in your account, but your custodian can lend those shares to somebody else who wants to short them, completely legitimately legal. They can make the money on that, and all that has to happen is you just have to earn the return on the Apple. So really, it's there's a lot going on behind the scenes people don't know about, and that entire DeFi lending is a way of kind of flipping that on its head.
Yeah, agreed. And I think that advisors who really are recognizing their clients will do this with or without them are starting to look at how do we do this. So yeah, that was a big eye opener for me getting into the world of wealth management, because I come from a technology background and really focused on the infrastructure. And just seeing the returns the client often sees versus the returns the firm sees, there's a big disconnect there. So I think this is that democratization of finance. It will open up more returns for the consumer and it'll drive more adoption. And so I find that a positive.
Yeah, well, I think most would. Excellent. So before we wrap up, there's 3 questions I ask everybody to end on a positive note. We kind of hit one of them already, but we'll get back to it. First question is, if you had one wish for something you can change in your company or the industry as a whole, what would it be?
I just wish that the market would realize it's coming faster and get moving.
Yeah, fair enough. I mean, it's that can be taken to mean any number of things, from crypto investing to just the infrastructure play that exists. And yeah, it's
we live in a world where I kind of feel like I'm in the middle of, I've got one universe swirling 1 billion miles an hour and another one churning away slowly, and we're kind of holding the two together. And I just think there's so much opportunity and adoption here, and I really wish the conversation would shift to the positives as opposed. We need to get out of that crypto is bad, it's used for money laundering, and into the opportunity.
So is cash. That's the interesting thing. So is cash. So is Canadian housing. So is anything that's marketable, period, can be used for it. So
I live in Vancouver, so please don't talk to me.
There we go. Yeah, Americans listening to this will never know the pain unless they pick up Sam Cooper's Willful Blindness. Anyway, so moving, and it's one of those things where, as usual, the future happens slowly and then all at once. So we'll see what happens. Second question, I already asked you about a number of challenges that you've had, but what has been the biggest challenge in getting the company to where it is today?
That's a tough one. It really is the objections in the market to keep things the way they are versus adopting how they come. It's kind of the flip of the other. It really is just seeing the opportunity and having to navigate through, like I said, the on-ramps of fiat and the negative sentiment. And then it flips, right? It goes from, okay, I'm interested, to now I want everything. So as you said, it's slow and then it flips really quickly. So I think it's just the speed. We're in the crypto world. We're a bunch of racehorses. We want to go quickly. And we're stuck with the speed of what is.
Well, yeah, that's for sure. You're definitely stuck. The last question I have for you is, what is it that excites you the most about what it is you're working on and keeps you getting up every morning to keep on fighting the good fight?
Well, it's such an exciting space. Personally, I'm really a believer in blockchain for good and the global opportunities that exist in a future state where we can create this world of global opportunity and introduce people to projects, ESG projects, blockchain for good around the world. So I think that opportunity just excites me. And then we've just built this team around us who've we've drawn this team to us who just loves how big the challenge is. And so everybody gets up every day and everyone's tackling their piece of this challenge. And it's an amazing team to work with. It's the best group I've worked with. It's really fun. So keeps the energy level up.
Absolutely. Well, thank you so much for taking the time today, Sarah. Very much appreciate it.
Yeah, thank you for having me.
So that was Sarah Morton of MeetAmi Innovations. And if you're in the Canadian market and looking for, well, actually in the US one too now with them, take a look at MeetAmi Innovations platform for how you can incorporate crypto into your overall, or digital assets into your overall asset management platform. And with that, as always, if you enjoy this podcast, please leave a review on Apple Podcasts, Stitcher, SoundCloud, Spotify, or whatever your podcast. And until next time, take care.
This podcast was brought to you by Woodgate Financial, an award-winning financial planning firm catering to high net worth individuals and their families. To learn more, go to woodgate.com. You can subscribe to this podcast on iTunes, Stitcher, and Google Play, or find more episodes at jasonpereira.ca.